Hi, Scott Nelson, Senior Wealth Manager at Boulay Financial Advisors, as well as a member of the Boulay Financial Advisors Investment Committee. This quarter, we review our current investment position in gold. Mankind's relationship to gold goes back at least 5,000 years with its use in jewelry and art. Gold started being minted for use as currency over 2,500 years ago. 200 years ago, gold's excellent electrical properties were discovered, leading it to be used today in everything from cell phones to satellites. Boulay Financial Advisors began using gold in client portfolios about 4 years ago as we became concerned with the potential impact of inflation as the world emerged from the COVID pandemic. By early 2022, there was little doubt that the Federal Reserve would need to raise interest rates significantly to combat inflation, which in turn would negatively affect stock and bond values and possibly pull the economy into a recession. Adding gold was a logical step as the hedge against inflation, falling bond values, and stock market volatility. As you can see in the chart, gold did indeed hold its own in 2022, losing less than 1%, while the stock market, as represented by the S&P 500 index, lost over 18%. And the bond market, as represented by the Bloomberg Aggregate Bond Index, was down 13%, all due to the Federal Reserve's aggressive raising of interest rates. But gold then took off in 2023, rising around 60% over the next 2 years, even as inflation dropped and the economy was doing well. What pushed gold prices higher was the other major event of 2022, Russia's invasion of Ukraine. In response, the U.S. and its Western allies took the unprecedented step of closing off Russia's access to global financial markets. That maneuver also greatly concerned major independent powers like China, India, and Turkey. Since 2023, all those countries have been buying large amounts of gold to use as a backup currency in case they need to get around doing global financial transactions in U.S. dollars. The massive purchases by those countries has provided an elevated floor to gold prices, which has more recently attracted speculators looking to jump on the gold rally train. But for how long will it last? When do these countries decide they've purchased enough and their price support diminishes? There's no way to predict. For that reason, we made the decision that it was time to take profits and cut back our targeted allocation to gold. We still feel gold has a role to play in client portfolios, but it's a smaller one, as we wish to limit the downside risk potential. So we hope you now have a better appreciation of our position on gold in 2025. As always, if you have any questions about what was covered in this video, reach out to your Boulay financial advisor. To learn more about Boulay, please check out our website or email us at learnmore@boulaygroup.com. Until next time, enjoy the return of spring.